Hi, and welcome to the Market Alert for Tuesday, the 29th of March 2022. So the headlines for yesterday: oil, gold, yen and yield curve slap lower as ruble and crypto rocket higher. The yield curve is collapsing and the market is now pricing in more than 2 rate cuts starting next year. Not good news, that means recession. Stocks jump, gold and oil dump on report Russia abandons denazification demands in peace talk. So the Nazis can stay. It's madness, isn't it? And again, oil slides as Shanghai COVID lockdown, global slowdown, spark demand fears, and also distribution of goods as well. In Shanghai, they've decided that the best way to do the lockdowns, or it's either Shanghai or Shenzhen, I think it's Shenzhen, that they would do it by using the river as a dividing line. So one side are locked up, the other side aren't. It's, again, the world's gone mad, hasn't it? Another day in the oil roller coaster market, without a doubt. And then the Japanese yesterday, the move is a big deal. The yen tumbles after the BOJ intervenes to cap yields amid global sell-off. So yeah, it's all happening, isn't it? That slowed the JGB yesterday in its up move, which we'll look at shortly. News, what we got today? Jolts at 3 p.m. and that's it. That's all you're getting. Consumer confidence is, there's no time for that one. So I imagine that's coming out at 3 p.m. as well. So there are your 2 news items for today. In the Dow, yesterday the market moving higher, but not until it did the classic move higher in the pre-market, dump in the cash, buyback before the close. Trading up to 78% retracement on the overnight as well at the moment, but struggling with the 200 MA. This is how it looks in the 30-minute chart. Like I say, up in the futures market, bring the value of the shares up, offload the shares in the cash market. This drives the market down, becomes oversold, crossover in stochastics. We've got a declining volume there as opposed to a climatic one. Market stops at the BRN, and then the market reverses and comes back and takes out the earlier high. And this is a pattern that we've seen for a few weeks now. And this overnight, the market already taking out the previous high. Expect the market to jump at the open and continue higher throughout the morning. Unless there is any sort of Russia-Ukraine news, then this market can move to the highs and continue up through the 78 and head towards the 89 level that we see here as well. So it's all go for the stock markets heading back to the highs. It's incredible, isn't it? The world's falling apart and the stock markets can move higher. And in the German DAX, similar picture. Again, you can see this starting to break out. Need to take out the 89 here, the 50 EMA in the daily chart. But again, back to green and we're heading higher. If you look at the 30-minute chart for yesterday as well, you'll see that we moved slightly lower in the cash to begin with. We double bottomed. We were oversold. And the market then moving to the upside strongly. Moving up 100 points, 200 points. And just topping out over 300 points in yesterday morning's move. And then the Dow opening, the cash opening, and dragging the Dow down with it. It took a moment or two for it to happen, but it did. And that, when I say a moment or two, I mean from this point here. This is where the Dow opened. So it took 60 minutes and then the DAX followed suit. But then as soon as we got to the previous day's close, oversold, the market was brought back, as you see there as well. So lovely trades yesterday, oversold, overbought, with all of the accompanying criteria for the market then to move in the opposite direction there. In the 5-minute chart for yesterday, again, it was mainly one direction in the start. You can see the market there moving higher, and then just hugging the 20 bar moving average as prices continued to the upside. There were small pullbacks, as you can see there, all the way back to the 20 bar moving average, with the market topping out at lunchtime with divergence highlighted here, and then coming back, making a new high before then moving to the downside. And this is something else that I've observed. You will get the market putting in where you think is the high, then going back, making a new high with the divergence, and then moving to the downside. And you can see as the market kicked off with the DAX actually moved higher when the Dow moved lower, and then eventually caught up, traded sideways, and then eventually moved to the downside following the Dow until it traded to the previous day's close, which you can see there, and oversold, but the momentum starting to switch, and then prices moving back to the upside there. So in the end, we can see that it moved sharply to the upside. We had this new high yesterday, and that was before the Bank of Japan intervened to try and bring down the value a bit, which succeeded, but at the moment we're still above the 5 bar moving average. If you look at the 30-minute chart, you can see the intervention there, the market moving higher. Started off in the pre-market session there, 7 a.m. The yen basically made its move during this time, moved 100, 200, 350 points there before being slammed by the Bank of Japan, and then moving all the way back. So they certainly had some impact on it because it was a ride up, a ride down. And at the moment the market, you can see, is double bottoming there and oversold as well. So again, attempting to try and move back up to the DP level for the yen. In the USD, GBP USD, market trading down to 78% retracement yesterday. Perfect area there. Market finding a bit of support overnight, and in the 30-minute pound, you can see that we were overbought, came back 89%, S1 low, and then the market moving lower there, and has been in the sideways range ever since, struggling with the close and also the 50 EMA and DP level as well. So the low is going to be an important area for the GBP USD there. And finally, in the metals, well, as I said yesterday, it was going to get monkey hammered, and it did, and it is going to again today as well. It's going to be like this until Thursday, when the Bank of America have to report their derivatives position to the OCO. And until that happens, they're going to get the price down as much as possible so that they can come within the regulations of how much exposure they've got. They're already breaching the regulations, but that doesn't matter anymore because even the regulatory bodies are criminal outfits now. And the 89% retracement here is I don't think is likely, is going to be taken out, and we're going to go down to the 50 EMA, because they're going to use whatever opportunity they can in order to do this, unless the only reason it will go up, unless something geopolitically with regards to Russia-Ukraine comes out that is bullish for the metals. Otherwise, they're going to do whatever they can, particularly at lunchtime with the London LBMA fix, to tamp down the market. As Ruston Bennett, the chief of the CTFC, calls it, we have the tools to tamp down the price if necessary, and that's what they did yesterday. Again, they should be screaming to the upside because of inflation, etc., but it's not. And there's the tamping down. As you'll see, there's the London fix, and then after we see the market moving to the downside as soon as the Dow comes on stream. This is when the Dow comes on stream. This is the London fix, and then they managed to move it lower in the evening as well. There's two patterns to hitting the price of silver. The first is the 1 o'clock fix, and after that 2:30 when the Dow opens is the next time that they come in, and then they continue. If the Dow goes down, they will then move the silver market down as well, because It shows that if the stock market goes down, the economy is not doing well. There's no demand for silver from the industrial side of things, so we can move the price lower. That's how they get away with this criminality. This oil market was also hit. There's obviously claims of the lockdown in Shanghai and Shenzhen, reducing demand. Yeah, it will. Well, it won't reduce demand. It'll reduce the supply of goods. So again, you can see that oil being tamped down also to the 50% retracement area there, but bouncing off that overnight. There's only one direction oil's going, and that's to the upside, because that's part of the agenda to create the hyperinflation, to put the middle classes under pressure, to bring along the reset, get them. They create the problem, they get your reaction, they provide the solution, and the US dollar e-cash digital was launched yesterday, if I recall, from reading at the weekend. So yeah, there's a lot happening behind the scenes, and it's going to happen fast as well. Before you know it, you're going to have a crypto pound, crypto dollar in your wallets, and everything you spend or do will be tracked and logged. Gold lower yesterday, down to 62% retracement as well. A huge amount of volume for yesterday as well. For gold, that's one of the highest I've seen for some time. Looks like there's some absorption in that one. So in reality, that should have gone a lot lower. So interesting. Let's see if it holds at the 62. Like I say, gold's not so much manipulated as silver because of the exposure by Bank of America. The dollar down yesterday, silver down with it, gold down with it, so there's a disconnect there as well, but trying to move back up today. You can see a huge volume there for yesterday as well, so again, some intervention on the downside, trying to support this at the moment. Okay, there we go. That's a quick roundup of events. Let's see what happens today. There's no economic news to really talk of. That starts tomorrow with the ADP non-farm numbers on Friday. So let's see. Okay, that's it. As ever, thanks for watching. See you in the next one.